I think probably when we had the same discussion last year, there continued to be a huge amount of optimism in the market and anticipation of strong capital flows continuing to come into real estate. I think that optimism is perhaps a bit more muted today. Perhaps a recognition that cap rates are pretty low in a cyclical sense, although the spread available over fixed income is still pretty attractive in many markets. But I think it's more about picking specific investment strategies where you think you've got strong scope to grow income, putting money in certain cities with strong supply, demand imbalance and better growth outlook. So I think people's strategies are becoming a lot more focused, reflecting the fact that we're probably not going to see much more cap rate compression from here.
Okay, good. And Rob, were there key trends that you were picking up that you think that there's been a large change over the last 12 months?
I think I heard someone recently refer to the investors as being slightly schizophrenic at the moment, which is probably a bit unfair. But I think that there is an element to which, again, coming back to the point about where pricing is, people are cautious. But on the other hand, there's still very much a significant amount of capital that's looking to be deployed. Certain investors have eased off, but I also expect some of them to be replaced by new entrants who've yet still to invest into Europe, looking at that. And I think certainly that applies to Asian capital flows and also to an extent the US. So I think I'd probably agree with Martin's view that there is some caution out there, but there's also still a lot of capital looking to be deployed.
Well, we see continuing pressures on yield, especially insurance companies need to generate ongoing income. This is coming from Europe, but also from abroad. So we see more Asian capital coming, but honestly, we are still very European focused, and there is so much capital coming from Europe that we have difficulties enough to allocate those capital.
Well, I think that I totally agree with what the colleagues here just mentioned, that there's way too much money allocated into the real estate. People are desperately looking for the suitable investments. And it seems to be like the same phenomenon as 2006, 2007. And people are stretching definition of core. People are looking for all kind of alternatives. What is property? What is by nature property? Definition of the property, and also there's obviously a higher appetite for the risk and that type of investment. So, kind of a lot of indicators that you should be very careful and you should really look after your investments and how you deploy your capital.